Good morning, YouTube. This morning I'm going to take a little while to update you on the money moves that I've made over the last 3 months. So let's get right into that. This was the 3 months prior in August 28th, 22 for about a month of what moves I've made. You can go back and look at that video if you want the details, but I was looking at an office building, and the answer was the office building was selling at a cap rate that was lower than what inflation most likely was going to be. Therefore, I could have lost money on that. So the answer to that was no. I'm still checking house prices daily. I saw... Can't spell. Let's try that. I've seen houses come up, but nothing really in the price range that would be a great deal with a decreasing market. I did see a duplex in Kansas City that I'm interested in, and I might pursue that. I'm not exactly sure what the rates are, and I need to establish some contacts in Kansas City to do that. Walmart stock, I'm still buying, although I did decrease the amount to create some additional cash flow. Disney, I sold out, so we're going to delete that. That was our update last time. Home Depot, I sold some. So Home Depot, I did a few investments where I bought and sold in an account. And so I have been trying some buying and selling here. And my schema has been kind of just seeing if when the price goes up, if I can have less. When the price goes down, I can get back in more. My core holdings I still have, but probably maybe 50% of, maybe a third of the holding I'm buying and selling a little bit. I don't really advise that, but I have a significant amount in Home Depot, and so I'm pretty much okay if it just goes to the moon at the amount that I have it at this time. But the market just went back up a couple days ago due to good inflation numbers, and I did sell additional shares. And so right now my position is the lowest it's been in a while in Home Depot due to that buying and selling, and that the price is pretty high right now relative to what I think it's going to do, just because the inflation numbers, are going to come in at some point, and in the December meeting they're most likely going to increase rates again, and that'll crash the market back down. And then we have a buy market to me. If not, it's great for my real estate, great for interest rates, and so I'm not worried about that. I've still been moving out of crypto. Like I was saying, I was already out of BlockFi, which is great because it just went bankrupt. In addition, I transferred some of my cash out of Coinbase, so I still have some money, not a significant amount, in Coinbase and Nexo.io that I have not transferred out. Learning and testing some Buffett stocks, Paramount, Home Depot, Citi, and Ally. I'm still watching those. Citi is back up right now to a little bit higher than I bought it for, but these all moved down with the market, as you might expect. They're paying a little bit of a dividend, but I haven't really, seen much of a dividend in the account. Not what I would expect for holding it for this long. My holds, Riven and Coin, I sold both of those when the market rallied. I did not like those. I lost money on these two experiments, but it wasn't significant to my overall holdings. And I've not bought Walmart, Pepsi. Up here on the sell side, and the same thing I was doing with Home Depot. When the market went way up, I sold some of my VIG to get to a position where when it comes back down, I can buy more on that. I still think you should hold consistently VIG, and I'm still doing that. That's just kind of a corner position that I've done that with. And so that's been most of my moves. Oh, in addition, I bought a 4-month treasury at 4.7%. And I have some debt. So I can add a little section down here and say risk reduction. So with interest rates going up, my risk of interest rates is higher. And so what I'm going to do is I have some debt that's at 3.85%. But if I pay it off, I'm basically losing money because treasuries are at 4.7%. And so what I'm going to do is just buy treasuries at 4.7%, or if it goes up higher, maybe 5.5%, instead of paying the debt off. And then when the debt comes, before it comes due and goes up to new rate, then I'll have the treasury money come in and have made money on that. So that's my plan on that. I think I bought one 4-month 4.7, so just to see how to do it. And I have not bought any of these at this point. Just dollar cost average. Still have 401k dollar cost averaging and those type things. And so I wanted to take some time to share that with you. Those are things I've been doing over the last 3 months. And so we'll label this with the date today, 11/13/22. So we know the last time I've updated you on the things I've been doing. And that's it. Let me know in the comments if you have any questions about what moves I've been making. What moves do I think you should make? I think you should have dollar cost average into VIG with half of your money that's automatically going into your wealth building account, and the other half should be going into cash. When you get a sizable position in VIG relative to your income and your savings that you're putting aside, then you can look at dollar cost averaging into individual stocks with a portion of the other 20%. But definitely I would be accumulating cash still and looking for opportunities. But you're not actually waiting to invest. You're actually investing in index funds the whole time the market's going down. You're not trying to time the market in general. If you look at the things that I've bought and sold I was talking about, this is more of an edge case with a small percent that I kind of mess with in a tax efficient account. So I want to share that with you today, show you what I was doing. Hope it helps. Let me know in the comments if you have any questions, and talk to you later. Bye.